So I'm going to speak for 20 minutes to half an hour today. As I said earlier, we're going to talk about the Let Property campaign with HMRC. I'm going to give a short intro just to talk about the firm, no longer than a minute, another minute at the most just to talk about me and my experience of HMRC as I used to work there in a former life. Then we're going to concentrate on rental profits, how they might get missed off of tax returns, how HMRC might find out about it, and more importantly, what we do to get from A to B and getting straight with HMRC and how we can help you. So just to start then, a little bit about Raffingers for the people that are logged in, which are not clients of the firm. Raffingers, we're based in Essex. We have offices in South Woodford. We do have a point of presence in London, but if you want to come and see us, or if you want to come and see me, you're going to have to make your way out to our offices in South Woodford, which is in Essex. We're a top 100 firm. We do specialise in a lot of HMRC stuff, and the reason for that primarily is that I used to work for the tax office in a former life. I was a senior investigator for many years. I left in 2004 and I've become a lot more cuddly since then. I do specialise in investigations, anything to do with nasty letters from HMRC, and certainly the Let Property campaign is something we have been specialising in very much this year. As you can see on our About Us thing, it says we've carried out 40 plus Let Property campaign disclosures. That's actually this year rather than to date, and it's now more like getting on to 50. So as I said, my background was with HMRC, senior investigator. I did spend a little bit of time doing technical work. I also spent a little bit of time doing some R&D work, but that's a talk for another day. I was previously at a firm called Haslers, and I'm now the tax partner at Raffingers, and I drive everything to do with HMRC, and I supervise all of our work with the Let Property campaign. So a little bit of housekeeping before we crack into it. Where to send your questions? I think you'll find a box where if you have any questions as we go through, please feel free to type them, and towards the end of the presentation, I'll address your questions and answer them. Similarly, after the presentation's been done, our admin manager is going to email everyone with details, with my contact details, email, telephone, whatever. If you would like to contact me directly, I have no problem in receiving a telephone call or an email from you, and I'll be happy to sort of answer that. If you do have a problem with HMRC, let's see if we can do something about it. So let's move on to the point that what we're talking about today, which is the Let Property campaign. And as the slide says, well, first things first, why might you have undeclared rental income? The first thing I have to say is if you have received a letter from HMRC which says something to the effect of, we believe that you are or you might have been a landlord and you need to do something about it, then you're in pretty good company, because many hundreds, possibly thousands of these letters are being issued. You're not alone. This week alone, I've seen 3 potential clients for the Let Property campaign who have all actually firmed up and they want us to act. And how do HMRC know about this? Well, even when I worked in the tax office, going all the way back between 1981 and 2004, HMRC had vast amounts of knowledge and resources available to them. And even at that time, they were developing links into land registry. So in very simple terms, if you happen to own a property, and HMRC can link back to your tax return, if you don't have any rental income, or if you're not making a return of your income on a tax return, then they could draw the conclusion, well, you have a second property. We know where you live. Why are you not putting anything on the tax return? But in addition to that, HMRC also have links to local councils who pay DSS tenants and have to make a return of that to HMRC. Letting agents regularly make returns to HMRC of the payments that they make to their clients who are landlords. So ultimately, it's just one of those things. HMRC have a vast resource, and clearly they're putting a lot of time and effort into sort of tackling what they consider to be errant landlords who aren't making the return of their income. Similarly, that does extend to capital gains as well, that if you've sold the house that you're renting, then ultimately you need to consider what the capital gain is. And on a couple of occasions, we've done that, we've calculated the gains, and we've made a disclosure of that. I often speak to clients and they're sort of keen to tell me, well, I didn't think I need to pay any tax. And a lot of them genuinely believe that. One of the common things is, well, the rent I received didn't even cover the mortgage. So I didn't think for a minute that I had any rent to pay. And of course, the trouble is that you can claim mortgage interest as a deduction from your rental profits, but the capital element of your mortgage is not allowable. And the mortgage interest is generally a lot lower than the capital repayment. So ultimately, there are other expenses as well. For example, I spent lots of money cleaning the house and repairs, etc. And it is quite possible that a lot of the cases I've looked at in the earlier years, people have made losses in the earlier years, and then they just kind of forget that when those losses are extinguished and you start to make money, well, possibly tax is payable later. But the main thing is, whatever the reason, to some extent, it doesn't matter. I met a wonderful guy about a month ago who just freely admitted, he said, I never wanted to pay the tax on it. I never thought I'd get caught. I've got no problem with that. If you do get a letter from HMRC, though, we do need to do something about it. And I'm going to talk through the process as to sort of what we do a little bit later. The other alternative is you may be watching today because you have rental income and you haven't received a letter from HMRC and you're thinking of doing something about it. And that's just as good a reason, to be honest. When we go through and talk about the process very, very shortly, we will come to where HMRC view the penalty position on any undeclared tax. And I have to tell you that if you voluntarily disclose to go through the property disclosure rather than waiting to get a letter from HMRC, your penalties will be lower. You're going to get higher abatements for disclosing without any fear of challenge. So anyway, let's talk now about the Let Property campaign. Who can do this? If you can see the slide on your screen, it's not open to companies, it's only open to individuals, okay, who want to disclose rental income either from single properties or multiple properties. Basically, if you believe that there's rental income and there's tax that's going to arise from that rental income, then you can use the Let Property campaign. The question is, do you need an accountant? Well, as an accountant, I think I'm bound to say I would get one. I think it's a good idea, because as I talk through the process, it can get a little bit tricky. If you were to consider registering, the first thing you would do is to go online and you could type in HMRC Let Property campaign and you would get taken through automatically through a hyperlink to register in the first instance. And to register, all HMRC are going to want to do is have your name, your address, your national insurance number. And at that point, you could click the button and actually register at that point. You don't need any further details. HMRC will then write to you directly and give you a disclosure reference number, which is in effect the key to get deeper into the disclosure. And when you look at what's required, I have to say it's a very arithmetical sort of series of forms and questions that need to be completed. HMRC are going to want to know about the property or properties that you receive rental income for. They're going to want to know what the omitted tax is, what the rental income is, whether the property is managed, and it will require the person filling in the disclosure to actually self-assess the tax, self-assess the interest, and work out what the penalty is by reference to what the penalty legislation is. So at this point, unless you're pretty good on tax and you understand about HMRC penalties, I would suggest that you are thinking about going to an accountant to do this. How do we go through the process of doing this? Well, I see several clients a week who are getting these letters. So if you like, I'm going to treat this almost as if you're a client sitting opposite me and I'm just going to tell you about the system that we use. The first thing is we need to understand what properties are involved, what rental profits or losses are involved, what expenses there are, and what income there is. So if you had engaged me, we would now be having a conversation and I would explain to you that tax is basically tax years are between April and April, as I think everyone knows. And the first thing that we need to do is to get a good handle on what rental income has been received each year and what the nature of the expenses are. And that is very much with the taxpayer or you guys to actually come up with, because I don't know. My job is to talk about the format in which you can do this. I've got some people that are not particularly computer literate and like to use pieces of paper and tag a load of invoices in the back. And if I was acting for you, I have no problem with that at all. I personally choose Excel, and if people are Excel competent, I think it's quite a good idea to work in that format. You can open up a spreadsheet, you have the various tabs at the bottom, and you can try and look at the various years between, for example, April 10 and April 11, and think, right, well, the property was rented, I was getting £600 a month at the time, and you can put down an income figure, and we can start to work out what the income is year on year. And you would obviously do this for all of your properties, either as separate tabs, or you could just list them down separately on each year. My job particularly then is to look at the expenses and to let you know the sort of expenses that you should be looking to claim in the first instance. If the property is managed or let, then your letting agent is going to charge you typically between 10 and 15% fees plus VAT. Those fees are going to be allowable. When telling me those figures, either give me the total rent and then the letting figures underneath, or give me the net figures. It works out the same mathematically, but it is an allowable deduction. Other things you can claim, you're probably going to have landlord insurance, so the annual costs of that are going to be allowable. Things like gas safety certificates, any repairs to the property, any electrical work where you need to have your stuff pack tested. These are all costs which are directly connected with your letting. If you have to travel to and from the property at all, then your mileage costs, we can work out roughly how far the property is from where you live and how many times you might have to go on to the property on a regular basis. If you're traveling to B&Q to buy a new door handle, even that sort of mileage is allowable. Also, things like repairs to the property as well. Going back, I've dealt with quite a few disclosures that go back touching on 20 years. And a common question that I had in almost every case, certainly the ones that go back that far, is I haven't got invoices and I haven't got receipts and I've had a lot of work done to the property. I guess I can only claim for the stuff that I've actually got invoices for. It's a great question, but it's not what people think. The point of using a disclosure is ultimately you're entering into a contract really with HMRC to say, I wish to use the disclosure facility. I wish to disclose that I've unpaid or have not paid, a certain amount of tax for these years, and I'm willing to pay the interest, I'm willing to pay the penalty, and I'll quantify the penalties in a minute and how that works. And ultimately we come to a settlement figure which encompasses absolutely everything. And the whole point is this is the figure we're disclosing. It isn't the start of a negotiation process where we're saying to HMRC, well, what do you think? What do you think about that? The whole point is we're going in and saying, this is what we believe is right. We are self-assessing what we believe we need to pay, what we'd like you to assess and sign off. And this is the figure that we're going to pay. What HMRC don't want to see as part of that disclosure is supporting invoices and documents. There isn't a facility to attach PDFs of invoices, nor are there any boxes where it says in under 500 words, tell us what happened. Not interested. What they're interested in is the tax and the interest and the penalties. So you might question, and it has been questioned to me, well, what's to stop me claiming a whole load of repairs, which I think might have been carried out, but I haven't got the invoices for, and there's a bit of a wink and a nudge that follows that. And the answer is this: HMRC are not automatically going to accept the figures. It will be looked at by an inspector who's been trained. And although there are a lot of settlements, and although all bar one of my cases, all of my 50 cases, 49 have been accepted, there is the chance that an inspector might look at the disclosure and think, do you know what, I want a little bit more information. Why might they do that? Well, if the ratio of tax isn't particularly high, if HMRC know that you've owned a property for 10 years, but we're only disclosing a couple of recent years, the answer might be that you've made some losses in earlier years, but disclosure doesn't really give us the chance to explain that. It just wants to know the years where there are tax. And if the revenue do ask questions, and they're entitled to, they could well turn around and say, can you give us the figures? And then for 2009-10, you've got 20 grand's worth of repairs. Can you let us know what that is? And have you got any supporting documents? At that point, we're a little bit caught out if we've made the figures up or we can't support it. So what I would say is, whilst we might not have invoices for absolutely everything, my job as an accountant is to go through critically and talk through with people realistically what is allowable, what estimates we can put in and what we can support to HMRC with reasonable explanations if the questions were ever asked. In the case of a couple of the people I'm acting where it's 20 odd years, I am claiming for some quite substantial repairs. But looking at the period of time that the property's been there, it is reasonable to assume that over that length of time, you would need some reasonable repair work. And the client has told me what was carried out and who carried it out. The simple fact is there is no receipt or invoice. But to be honest, on my instruction, I've gone ahead and said, I think we're okay claiming this. In the event of any questions, we can do that. I'm going to touch briefly on how the penalties work, because this is another reason why I think you need to go to a qualified accountant, not just to help you with putting the income and expenses into each year, but also to sort of deal with the interest calculations and the penalties. Now, the penalty calculations are actually based on statute for normal penalties. It's not like a particular penalty regime has been sort of brought up purely for the Let Property campaign. It's the standard penalty regime for incorrect returns and failure to notify cases under Schedule 41, but that's a bit dull because I promised myself that I wouldn't talk about specific legislation today. In very, very simple terms, there are different bandings for penalties. Not failure to notify, but sort of omissions from tax returns. And there are bandings which runs from you were careless in your behaviour, or you were deliberate in your behaviour, or there was a deliberate and you concealed your behaviour. What HMRC have pretty much published is that if you have years which go back over 6 years, they are going to expect it to be something called a deliberate behaviour, and the penalty range for that is between 35% and 70% of the additional tax that becomes due. The difference between 35 and 70 and what you're going to claim, it depends on the mitigations that you have, and this is called telling, helping and giving. By actually using the disclosure facility, I would suggest that by using an accountant as well and sort of providing figures, settling your case, you are going to qualify for all of the mitigations. So your penalty for a prompted disclosure, i.e. you've had a letter from HMRC, is going to be 35%. If you did the disclosure and put less than that, HMRC would simply write back and say, we're not accepting it. If there are years that are prior to 2008-9, there's a different set of penalty legislation. For anyone who knows about tax, it's the old Section 95 and Section 7 with different mitigations and different percentages. Again, if your rental goes back into earlier years, I'd suggest you want an accountant because that's a different set of rules and you have to be of a certain age to remember them, which unfortunately I am. In terms of the interest, again, we would self-assess that. There are basically facilities that you can use, and HMRC publish certain things where you can put in certain dates and it will give you the interest and it will agree to what HMRC say. There isn't really much arguing with interest. It's there purely to compensate the exchequer for the fact that the tax is paid late, and we have to actually put it down and we have to pay it. Another small point on penalty is that if you haven't had a prompter letter from HMRC, and if you want to do something about this, which you can, your penalty is more liable to be in the region of about 20% rather than 35% because it's not prompted disclosure. Going back to what we do as a firm, so we've now got to the stage where you, the client, have come back to us and actually confirmed what your rental income is, and you've given us an idea of what you believe the expenses are each year. It's then my job to start putting that into a format where I can look at stuff in each year. And the first thing I do is to sort of consider whether possibly you have actually remembered all of your expenses. So it is my job to get your tax legally and fairly as low as I can, because you might have had some expenses that you haven't necessarily thought of. Things to consider: your property in some of the earlier years might have been fully furnished, in which case you're going to get a wear and tear allowance. That might have stopped now going forwards for tax purposes, but in previous years you may qualify for that. As I said, there might be some nominal costs for travel, mobile phone. You might even have a use of home claim if you're doing anything to do with your rental business indoors, although admittedly it won't be very high. Obviously things like insurances and repairs. Maybe you possibly pay some council tax and ground rents. Maybe you're paying utility bills, gas, electric, water. Not a lot of people do, but occasionally it crops up. Some people pay to have their windows cleaned and their gardens cleaned as well. These are all expenses that if you're incurring them, then you should be claiming for to get your profits as low as you can. The next job of us is to actually work out what the tax implications are of that. I have had some clients where they have made a return of some of their rental income, but not all of it. Others have just not quite got round to it. Others have missed it off of their tax return, whatever. Ultimately, our job is to sort of, for each particular year where we have a rental profit, we need to establish what your other taxable income is in terms of whatever it might be, self-employment, pay-as-you-earn, dividends, a combination of all three. And if you like, your rental income is going to sit neatly on top of what your total taxable income is. So for example, if you had a taxable income of about 20,000 and perhaps you've got some rental profits, income after expenses that is, of say 5,000, it's going to sit directly above 20. Realistically, that's going to be taxed at 20% because it doesn't push you into higher rate tax. You may well have a taxable income of 40, 50,000, in which case any rental income will sit above that and will be taxed at 40%. And at the risk of just labouring the point, if your rental income takes you from basic rate to higher rate, or if it takes you from higher rate into additional rates, then it's our job to actually mathematically compute what the tax effect is. I have literally today, this sounds a little bit glib, but it's true, the very first case I've dealt with where we've gone all the way through and we've seen all of the supporting documentation, and the client's had rental income for about 10 years and there's no tax to pay. And the reason is because she had losses in the earlier 3 years with some very substantial repairs, which I've seen the invoices for and I'm perfectly happy with. And those losses have just cut out the profits in subsequent years until we get right up to 2018. We have a small figure. We're going to do the 2018 tax return for her, but she has virtually no other taxable sources of income. She lives very simply, I have to say. And when we submit that return, there won't be a tax liability anyway for the whole year. So it's still been a constructive exercise because I've had to send quite a detailed letter to HMRC to explain why we're not going to use the Let Property campaign, because I think it would be slightly inept and a bit short-sighted just to write to HMRC and say, you know, you sent that letter to our client, we're not going to use it, it's fine, there's no tax. You're right with that? That really isn't going to work very well. So we've explained in some detail the work that we've done and that we're absolutely happy, and we've seen the supporting documents, and I do expect HMRC to accept what we've said. In terms of fees that we charge, if you are interested in speaking to us, I would always have a chat with you first, obviously on a sort of fee-free basis. If you can get to South Woodford and talk to me for an hour or so, we do a very nice cup of tea and a biscuit, and I would be more than happy to talk to you about the whole process that I've explained here today and realistically what it would cost. The fees are kind of bespoke to the sort of level of work that we have to do, the number of years that we go back, the number of properties that we have to do. To give you just a broad idea, it generally varies between, say, £1,000 and around about £1,500 plus VAT. Very rarely does it go above that, very rarely does it go under that. So that would just give you a ballpark figure that if you want us to act for you and look at this, then we'd be more than happy to. So, I'm just checking, I can't see that we have any questions at the moment, so I'm going to skip very quickly onto the worldwide disclosure facility and talk just in very simple terms about that, nowhere near as much detail. This is something that the firm specialises in as well. Over the years, HMRC have had a number of disclosure facilities and have been linked to trades and professions. They've been linked to offshore accounts. There's been Liechtenstein disclosure facilities, and one by one, they're sort of generally closing off. People have had their opportunity. What we're left with, apart from the Let Property campaign, which is very much purely to do with rental income and personal landlords, but we do have this worldwide disclosure facility and the opportunity to bring your tax affairs up to date. We've done a couple of these. I'll give you just an example, or two examples of cases which we've worked recently, just to see if there's something that might affect you. Bizarrely, a personal friend of mine, not linked with the firm at the time, got in touch with me knows that I work in tax, and said, I've had this little holiday home in Cyprus. I don't make a lot from it. I've basically had a sitting tenant who's a very elderly Cypriot lady who's lived there for years, but I do make more out of it than I have to pay. What should I do? So I ignored the fact that I'm a friend and sort of tempted to say do nothing, because I thought I can't give that advice. I said, well, look, if you want to do something about it, we can use the worldwide disclosure facility. And he wanted to do it. He wanted peace of mind. It was a similar sort of job really to the Let Property campaign. We literally worked out what income he received, what expenses he was entitled to claim. We pulled together for his benefit and our benefit a set of foreign rental accounts. He's actually recently turned a pensioner. He wasn't a particularly high earner, so we worked out the tax, which was all going to be at 20%, and we registered for the worldwide disclosure facility. We completed it. It's a very, very similar format to the Let Property campaign, and computed his tax, which was somewhere in the region of about £1,200, which it was a lot to him, but in the scheme of things, perhaps it's not a lot really. And we submitted it, he paid the money, and about a month later, HMRC wrote out and said, thanks very much, it's all accepted, you are clean, you're good with the house. So that's good. He now has to do a tax return, which I'll give him instructions probably to do himself, but if he wants the firm to do it, we can. And his tax return will just consist of his foreign income and his foreign rental income and his pension income. The other case I've dealt with was a man who was receiving some interest from an account which was in Israel. The interest wasn't very much, but he just felt obliged to do something about it. He'd received little amounts over a long period of time, and he wanted to disclose this. Exactly the same thing. We worked out exactly what was going to be taxable. We pulled together some schedules. We registered. We submitted the case. He had something like £700 to pay, which he did, and that's been accepted. Going forward, he does tax returns, and his foreign interest will go on his tax return in the usual way. So, as I said, I wasn't going to go into a lot of detail with the worldwide disclosure facility, but it is something that we deal with here. Just a small bit of advertising for us as well. We also deal with all sorts of HMRC inquiries, right the way from criminal, right through COP 9, which is fraud, COP 8, which is offshore structures and contrived avoidance. Anything right the way down to employer compliance visits, and just to be honest, anything particularly nasty from HMRC, we're always happy to take a look at. So anyway, I think that's pretty much going to wrap up my presentation as it is. I hope I've covered everything. I can't see any particular, or an anonymous attendee said, I'm struggling to hear you. I'm so sorry. I'm actually speaking quite loud in the room, and I think it's the microphone not picking it up. I've got a question from you. What if we already pay tax abroad for the rental property? Great question. It should go on your tax return, and providing it's in a jurisdiction where there is a double tax treaty for the country in which you pay, then you would claim the tax credit on your tax return. So in simple terms, if you imagine your tax calculation might be, you start with your UK income, which may be pay as you earn or dividends. We would add on the foreign rental, which is part of your taxable income, and we would get to a tax figure that's due on all of your taxable income. You then get relief for any tax that you paid, which would be under pay as you earn as you go, and any foreign tax credit that you've paid. And then you get to a final tax figure. You're going to either end up with nothing due because your foreign tax has effectively been paid by what you pay tax abroad, in which case that's fine, but it should still go on your tax return ideally. There may be a small balance due because not enough foreign tax has been paid, in which case the balance will be paid to HMRC as part of your self-assessment. If you've overpaid because your foreign tax is too much, you're not going to get that back, unfortunately. HMRC are not going to write you a check for the tax that you've paid in another country, but ultimately you should do it unless it's a jurisdiction. Is there a treaty with India? Good question. I think there is. If you want to drop me an email so I can get in touch with you directly, I will get back. I think there is, to be honest, but sort of when we send the details out, just drop me a quick email and I'll confirm that. Okay, I think that's all we've got in the way of questions at the moment. Can you give a list of countries? Now that sounds like a bet, doesn't it? It's like, how many countries can you list in 30 seconds? Email me after the meeting. I'll get back to you on that. Okay. I think that's pretty much me done. We are going to send out some contact details. I get the feeling there may be a couple of questions that people might want to ask. You're welcome. That was a thank you, by the way. Might want to ask but don't want to go into an open forum. That's perfectly fine. Please feel free to email me. You can give me a buzz. If you have got any issues with HMRC, everything is resolvable. At the end of the day, once you actually get into the disclosure process, I mean, you have to go from start to finish, and there may be tax to pay. But you know, you're not going to go to prison over this. Do not panic. Everything can be resolved. So I'll look forward to hearing from you. Thank you very much for your time today. Hope it's been helpful. Hope I've covered everything. If not, email me and ask me. Okay, thanks a lot. Bye.